As many of you know, just over 4 years ago, the United States SEC filed its lawsuit against Ripple. I'm finally able to announce that this case has ended. It's over.
Party people! What's up, bull runners? Welcome back to the channel. I'm excited to be back with you as well too. I have been spending the past few days in Tulum celebrating my girlfriend's brother's bachelor party. So forgive me because my brain is basically tequila right now, but we have some exciting stuff to talk about in this video because with the SEC dropping the lawsuit against Ripple, it is officially over. We've been saying this for so long. I mean, in fact, this whole channel has basically been covering on the Bull Runners channel the XRP lawsuit for years and everything that's happening with Ripple and in the broader macro crypto market. So if you guys like crypto, if you guys like making money, make sure you subscribe because not only am I going to break down in this video for you what's going on right now, but I want to talk about what's happening in the future for XRP specifically. Also, the rest of the crypto market as XRP sits at $2.50. What does this mean? Because this has been the biggest boot on the car, so to speak, for Ripple. And with this news, XRP only pumped 12%. So this is getting a lot of people worried that this pump could be short-lived, like previous good news events, and that we're going to trade further to the downside. But is that actually the case? So what we have to talk about is what the Federal Reserve just did with the recent FOMC meeting and the speech from Jerome Powell, the outlook for Total 3, which is the crypto total market cap excluding Bitcoin and Ethereum, everything outside of the top 10 in the crypto market, and the number one indicator that we need to be watching next that is going to signal the next major breakout in the altcoin market as it did last bull run cycle, and how just recently this indicator started to break out again, which is a leading indicator to signal what's to come next in the crypto market. Plus, we have to discuss the unemployment rate, inflation, in an absolutely insane way that we're helping businesses get back tens of millions of dollars from the treasury if they have a business. So if you guys are feeling blessed, if you're feeling bullish, comment 777. And if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the subscribe button. Let's run it.
Sitting here today and reflecting on 4 years ago, it seems very clear to me that this case was doomed from the start. In so many ways, it was the first major shot fired in the war on crypto. I truly felt like I knew then that Ripple was not only on the right side of the law, but I felt that we were also going to be proven to be on the right side of history.
It really, I think, sends an ominous sign for innovation around cryptocurrency in the United States. Picking winners in general has not been something the US government should be in the business of doing.
I think the judge realizes this is not just about Ripple, this will have broader implications.
As Mary Jo White, the former head of the SEC, has said publicly that she views this as a dead wrong, and the SEC is dead wrong on this decision.
Ripple is the first company with the resources, determination, and grit to fight back against the agency's overreach. And today, this journey finally concludes. Today is a victory and a long overdue surrender by the SEC. The SEC, under Chairman Gary Gensler, went after the whole industry, using the same arguments they used against us. They weren't out to protect investors. They were out to intimidate and terrorize. The regulator, whose primary purpose is to protect investors, went all in on a non-fraud, victimless lawsuit and wiped out $15 billion of value from innocent XRP holders. The SEC was the market manipulator. The SEC wasn't seeking justice. They were seeking to win a case at any cost. Forces inside our government aligned with the SEC and embarked on a campaign of debanking anyone associated with the crypto industry. This was lawfare, a war of legal terror. Fortunately, the judge rebuked the SEC multiple times in this journey. First, for lacking a, quote, faithful allegiance to the law. The SEC was sanctioned in our case for discovery abuses, and the pattern was repeated in other crypto cases.
Well, let's just say they're trying to confuse you.
We won then on every critical legal point, proving that the digital asset XRP is not a security. That is now the law, and those wins have laid the groundwork for policymakers to adopt a set of rules for crypto that are in line with nearly a century of securities law. With today's news, the war on crypto has ended in defeat for those who turned our own government against a technology and an entire industry. I'm heartened that we have paved the way for other industry players to see the value in not backing down, and for others to use our legal playbook to fight back. We are now closing a chapter in crypto history. I think we are all stronger for our prior litigation successes and today's landmark victory. Progress is worth fighting for. We won multiple pro-crypto victories at the ballot box last year. It's time to make the US the crypto capital of the world. Thankfully, we have new leadership in executive and legislative branches of our government. That leadership is actively seeking a rational and constructive way forward on crypto. Let's make the most of this. This is an incredibly promising moment. Let's come together. Let's leave the tribalism behind. But let me make it clearer that my main message, what Ripple's main message today, is about gratitude. It's gratitude to everyone who stood by us, to every Ripple employee, to the incredible legal team here at Ripple, led by the best chief legal officer in the business, Stu Alderodi. Gratitude certainly to the XRP family, to our customers, to our partners. Thank you. We couldn't have won this battle without all of you being behind us and working together. I truly believe we all agree there's immense opportunity with the largest economy in the world finally taking a pro-crypto and pro-innovation approach to build this technology in order to solve real-world problems for people around the planet. This was a fight Ripple never wanted, but one we knew we had to win. And today, emphatically, we have. Thank you.
All right, Bull Runners, welcome back. So with Brad Garlinghouse making this video, expect to see him on tons of different news stations doing interviews and talking with all the mainstream media stations. In fact, right after he made that video, he went on stage and he just said this.
Just a few minutes ago, right before we walked up here, I posted on X that we can now announce that the SEC is no longer pursuing their appeal in the Ripple case. We're obviously, yeah, thank you. I've been
should we get a standing, little standing
This is
ovation?
good.
I
This
can
is
join
good.
your
This is
feet. This
good.
is a great
The
moment.
whole industry, this is a good thing.
Come on, come on.
It's been 4.5, almost 4 years and about 3 months since the SEC originally sued us. Certainly a painful journey in lots of ways, but as we said then, I mean, two things I'll highlight from what we said then. I really deeply believed that we were going to be on the right side of the law and on the right side of history. It's something we said then, and it's something that I feel kind of vindicated looking at this now. I mean, the other thing I would say, which there's a video I posted on X a short while ago, and one of the things I point out is the system just feels broken that we had to fight this fight for the industry. And you had an SEC attacking the industry, and particularly in the Ripple case, there were no victims. There was no investor loss. This is not something where the SEC was like, oh, something bad happened. It was just, they were trying to bully. They were just not acting in good faith. And luckily, you did have courts rebuke them. But look, I also, this is a moment to celebrate. I think we as an industry on the other side of it, that's good for everybody involved. It's good for Blockworks, that's good for Bitwise, that's good for Ripple. And so I'm really happy about it.
And also, Bitnomial is launching the first ever CFTC regulated XRP futures in the United States of America. And it's going to begin trading March 20th following the voluntary dismissal of the Bitnomial exchange lawsuit against the SEC. So not only have we seen these lawsuits from the SEC against the industry dropping left and right, the Ripple being the biggest one, the most important thing that we need to focus on is what's happening on the charts. Because I know a lot of people get super bullish on this, and you'll see posts all over Twitter and social media saying XRP is going to $5 right away with the lawsuit news. And look at what the lawsuit news did. It only pumped it, like 12%, not much. And we're still in this bearish channel here. So we need to watch $2.90, in my opinion, as the major resistance right here. And if we cannot clear this, then XRP is just going to continue to range between resistance, which is roughly $2.90. The ultimate resistance is $3.40, and support, which we can see multiple touch points right here, right here, right here, even right here with this long wick right here, and the most recent pullback right here. So we got 1, 2, 3, 4, 5, 6 points of contact. So this is a major support to watch. So anything that happens between a support and a resistance is irrelevant. We want to wait for a trend reversal. So what a trend reversal would be is clearing of major resistance, holding it as support to consider a long position in the market. Otherwise, XRP could just roll around right here and come back down to backtest this zone of support right here another time. So if we don't see clearing of resistance or breaking of support, then I'm neither bullish or bearish in the short term on XRP. I'm neutral. And I'll explain towards the end of this video the number one indicator that I'm looking for to give me a clear signal about what's about to happen next on a macro market picture, because the markets move based on one key thing, and you'll learn that by the end. Let's look at the RSI. We're on the daily chart right now. The RSI is at 53. We're still in a downtrend here since the 2nd of December. So unless we clear this descending resistance, XRP will just remain in a downtrend. Also, the MACD, we can see, is in the negative right now. We did experience a bullish cross all the way down here on the 14th of March, but it's not confirmed yet until the MACD line right here in blue crosses above the 0 line, and also the signal line as well too in orange crosses above this line. But it's actually good news that we're in the negative and we're seeing a bullish cross. It'd be different if we were seeing some type of bearish cross up here above the 0 line with this breakout right now. So this is actually pretty bullish, because at some point the MACD line, in my opinion, will go to the upside. So this is leading me to believe we will see further price appreciation for XRP into this resistance. The real question is if we clear it or we get rejected from it the next few weeks, based on what I'm going to share with you towards the end of this video. Because look at the indecision down here between the bulls and the bears. We saw a bullish cross, bearish cross, bullish cross, bearish cross, and now we just saw another bullish cross below the 0 line. But overall, with this lawsuit being dropped, this is just extremely bullish news regardless, just because the banks now have the green light. There's no regulatory uncertainty. We just need classification of what XRP is moving forward, a commodity, a currency, because in the lawsuit, the judge didn't officially declare XRP as, a currency or a commodity. It was really whether XRP was qualified as a security under US law, specifically the Securities Act of 1933, based on the Howey test, saying that XRP sales to institutional investors like hedge funds or banks constituted as unregistered securities offerings, whereas XRP sales on public exchanges, like if you're going to buy it on your Coinbase, Crypto.com, Poloniex, Kraken, you name it, wasn't security sales. So there's still no information out about Ripple paying the fine yet, so we still have to hear about that. Unless that's coming out while I'm making this video, I haven't seen anything about it. You guys can share the links in the description below. So we're gonna see more announcements come out over the next few weeks, specifically about the fine being paid, and we'll cover those on this channel for you guys. And what I want to talk about is what is happening next, because the Federal Reserve just had their FOMC meeting, and there was a 99% expectation for them to keep the rates the same. Well, sure enough, that's exactly what Jerome Powell announced. So they neither cut rates nor did they rise rates. And looking at the crypto total market cap, excluding Bitcoin and Ethereum, total 3 on the daily chart, we can see that the market had a little bit of a positive reaction, but nothing too crazy, because we're still in this downtrend, figuring out whether we've seen the local bottom with this C wave correction right here on the 11th of March, or if we still have further to the downside to go. So until we clear roughly $940 billion, this is the major zone that I'm watching as resistance right here, then we will still be in a downtrend. So the entire altcoin market, excluding Bitcoin and Ethereum, could break out and we could see something like this happen, but that doesn't mean it's a trend reversal unless we clear $940 billion, because we could see this roll back around like this to come back down within the $750 billion range. So
April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code, who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man, maybe you just want the treasury to keep your money, but if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now. Click the link and let's get you paid.
What I think we're going through right now is very similar to what we went through right here. And it's very tough to know exactly where we are just based on looking at the price chart alone. So we have to look at some key indicators for confluence here and then also stack that up with what the Federal Reserve is doing that I'll talk about in a little bit. So one of the main things we can look at for confluence is the MACD and compare back to the past. And as you guys can see, just like I showed you on the XRP price chart, we've seen indecision between the bulls and the bears, between a bullish cross, bearish cross, bullish cross, bearish cross. And we just went through another bullish cross. And so we saw the same thing happen through this phase right here between June of 2024 and November, where it's just a lot of indecision and a lot of crisscrossing here, not giving us any clear signs that Total 3 was going to break out until we cleared the $650 billion market cap range. So as you can see, we were in this bearish channel right here from the 30th of March until we broke out on the 20th of September right here. But this was a failed breakout because we didn't clear this previous high of the 21st of July. We got rejected from it. And then we just held support on top of this descending resistance, which is now acting as support and coiling up right here until the 7th of November. Once the 7th of November took place to the 8th of November, this was a clear trend reversal right here as we made a higher high. And it was very fast. It was very rapid. We didn't coil up like this to make a higher low. We just kept breaking out massively. So when breakouts happen like this at the end of November going into the Trump election, that's when we see everything in the green, everything exploding, and then we see the MACD finally make a decisive bullish cross and a major breakout to the upside. So you don't want to get caught buying these major breakouts when we're about to experience a bearish cross well above the zero line. You want to be accumulating when we are well below the zero line after a long extended consolidation period of indecision between the bulls and the bears, kind of similar to what we're going through right now. So I actually do think in the macro, this is a great accumulation point. Again, not financial advice here because, we could roll over and we could drop further to the downside for the final capitulation event before working our way out of here and breaking out. And it's very dependent on what I'm going to talk about over the next few minutes here, because what Jerome Powell says affects the markets drastically. For example, after his speech, look at this, stocks are ripping, but yet the total crypto market, excluding the top 10, is down right now, and we didn't even break the previous high of 2021, whereas gold to the US dollar has broken out to a brand new all-time high above $3,000, whereas altcoins lag behind drastically. So right now, I'm not too worried about the altcoin market because as you can see, we're still in an uptrend. We're just forming higher lows is all that we're doing. So this sell-off has come back down to back test this ascending support since the bear market bottom, where you can see one point of contact right here, another point of contact right here, multiple points of contact right here, and right now. So what I want to see happen relatively quickly is a steep recovery in the market, similar to what we went through back here, where it was like a V-shaped recovery, because the moment that we drag this recovery out for too long, and if we do something like this and we start going below this ascending support and flatlining like this, that's not a good sign, because that's very similar to what happened to Bitcoin all the way back here after the bull market top was in, where we did see a recovery, but we dropped below this ascending support and we just started to flatline like this. So imagine this is all you're seeing on the chart right here, and we're not seeing a V-shaped recovery into new all-time highs, and instead we're losing a multi-month or even a multi-year ascending support, and then we just start flatlining like this, showing that the bulls have lost all momentum, and then that's when we see a capitulation to the bottom after that. So we do not want to see something like this take place for too long, because since November of 2022 we've just been holding this ascending support right here. So sure, Bitcoin could come further to the downside technically based on this chart right here, but I want to see this get bought up relatively quick. So what will determine if that happens? Well, it's the Federal Reserve issuing quantitative easing, because the Fed is slowing on their QT, which is quantitative tightening, and also the Treasury redemption cap cut is from $25 billion to $5 billion. So liquidity is going to start coming back into the system, and this would be the main bullish catalyst for the market, because looking at the Fed balance sheet right now over the past year, they've been tightening on their balance sheet. So it is very difficult for risk on assets to do well while the Fed is tightening on their balance sheet and selling their assets. If the Fed was adding to their balance sheet, issuing quantitative easing, lowering interest rates, and printing more money, then we would see the markets breaking out. But because we're not seeing those things happen, the markets are struggling to break out. So it's just really been a rotation game of people selling one project, moving it to another, and then retail chasing those pumps, thinking that new money's coming to the market when it's just a game of musical chairs here until new players come into the game. And what are those new players? Well, it's new dollar bills being printed. So the Fed balance sheet, in terms of total assets in millions of dollars from March 5th to March 12th, looks like it ticked up a little bit. So if we see this flatline for a while, then start to go back up, then that would be the perfect storm of opportunity, very similar to what we saw happen right here on September 9th, if I zoom in here for you guys, of 2020, when the Fed stopped tightening on their balance sheet and you see this little rounded bottom right here, and then it spikes up by September 18th, right when we were going through this phase of the market cycle right here between August 21st of 2020 until September 11th of 2020. That was basically right after the market broke out to $165 billion for total two and pulled back about 27%. And then we had to work our way through this area right here on this breakout while the Fed was adding to their balance sheet again. So you can see how it starts to tick up. And by January 1st of 2021, the Fed was all the way up here in terms of total assets in millions of dollars. And sure enough, the market followed suit. We saw everything break out, aggressive back test right here of the previous range high, followed by a continuation to the upside after a quick consolidation period. And then the markets just simply followed what the Federal Reserve was doing with their balance sheet. Look at how rapid this increase was all the way until, guess what? 2022, when the bear market kicked in, the Fed started selling their assets. And so this is not going to go down forever. I've said this so many times. Eventually, I think there's going to be a turning point, and Jerome Powell just said it, that they are slowing quantitative tightening. It doesn't mean that they're going to start adding to their balance sheet right away. There's going to be a few more FOMC meetings. But in my opinion, this is just the beginning of the real bull run. And it's going to take some time for this to play out. So looking at what happened in 2020 during the last time the Fed went from tightening to easing again, that's when the markets broke out. So Bitcoin versus global liquidity, which is M2 minus the offset by 10 weeks, is almost like a cheat code for Bitcoin. And if we just bring up the global liquidity index right here in yellow compared to the crypto total market cap excluding Bitcoin's chart, you guys can see, if I just move the altcoin market out of the way, what happened here. We can just simply see that global liquidity wasn't really doing anything until right here in March after COVID, when the CARES Act was signed into law and the Fed just started adding more to their balance sheet and printing more money. That's when M2 absolutely exploded to the upside after coiling up the entire crypto bear market. So look at how correlated this is right here. You can even see with that 2019 breakout at the peak right here is exactly when M2 pretty much topped out and rolled back around again, while the market rolled back around again to the downside. And when M2 broke out, the market broke out shortly after that. And then of course the black swan event from COVID, no one could have predicted that. But you can even see M2 pull back even before then. And then M2 just massively exploded, and then it took some time for that to rotate into the crypto market while global liquidity was just on the up and up and up. And then you can see as global liquidity started to slow down a little bit and roll around, that's exactly what happened to the crypto market as well too. So this is the number one indicator that we need to watch, because if there's no new liquidity coming into the market from the Treasury and the Fed, then how is there going to be new money coming in the crypto market? We've already seen the most bullish news hit Ripple and XRP, which is the lawsuit ending, and it could barely pump 12%. So we just need new money coming in the system, sloshing around, able to flow into the crypto market. So let's just zoom out again and let's see where we are in terms of global liquidity. Now, can you guys notice how since the bear market, global liquidity has been pulling back? We haven't made new highs right here for this global liquidity index in yellow. And sure enough, total 2, which is the crypto total market cap excluding Bitcoin and Ethereum, hasn't made a new all-time high either. So what's happening right here is almost identical all the way back here last bull run before the markets exploded to the upside. So do we need another COVID to happen for the Fed to react and print more money? I don't know. I hope not. But either way, we need the Fed and the Treasury to print more money. We need global liquidity to spike to the upside, because then that would lead to a massive altcoin breakout. Because all we've been doing right now for this global liquidity index is just forming a series of lower highs and lower lows that you can see. Right here a lower high, right here a lower high, right here a lower high. And right now we're just forming a lower high unless we break the previous high on the 16th of September. It's the same thing with all of these lows. They're just a series of lower lows telling us that we've been in a downtrend since global liquidity. It's no wonder, because the Fed's balance sheet has been declining. So this is not rocket science here, guys. When more money is put into the system, that's good for crypto, because it devalues the dollar. Because if you have an unlimited supply of money and they're unlimited money printing, and then you have a cap supply of stuff like Bitcoin, even XRP with 100 billion, yes, it is a larger supply than Bitcoin, but it's still capped, then that's when you have a perfect storm for market expansion of risk on assets. Now, could it be that gold breaking out to a new all-time high while global liquidity is also ticking up right now is a sign that this is about ready to come into the crypto market? Well, let's look at this. You guys can see since the 31st of December at the bottom of the screen, since global liquidity right here has started to rally, gold has started to rally as well too, whereas the altcoin market has been selling off. So does that mean that gold is a better buy right now than cryptocurrencies? Well, no. Why would I buy something at an all-time high? That just doesn't make any sense. I like to buy stuff on pullback. So in my opinion, crypto is better to accumulate than gold right now. I was accumulating some gold around $2,000 an ounce right before this major breakout, along with some silver. So gold has outperformed Bitcoin over the last 30 days, but Bitcoin is destroying gold over the last 5 years. Bitcoin is up 866%. Gold is up only 78%. And sure enough, we have Peter Schiff chiming in here to Anthony Pompliano's post saying gold has outperformed Bitcoin year to date as well. Bitcoin is down about 3%, while gold is up over 10%, but the comparison is irrelevant. Bitcoin has nothing to do with, nor is it even correlated with gold. Bitcoin has outperformed lots of stuff over the past 5 years. Why single out gold? And then Anthony said, I'm not a gold hater, but I do believe that Bitcoin is superior. Gold bugs should be excited that gold has expanded its market cap. While Bitcoin has grown so successfully, this means the combined addressable market is much larger than most previously thought. So Bitcoin is the digital gold, and in order for altcoins to do well, Bitcoin needs to do well. So as long as we don't see unemployment spike rapidly, like we've seen happen the last few times recessions have come in anytime soon, then I would expect a recovery in the market to happen in the short term, because this takes time to play out. Unemployment went from 4% in January to 4.1%. So it's not that drastic of a markup. So we'll see what it comes in at for March, which we will see next month. So only time will tell for that. And inflation dropped from 3% to 2.8%. In my previous video, I showed you guys how inflation is much lower than this actually right now. So this is why it leads me back to the CME group right here for expectations for the May 7th meeting. 80% are expecting the Fed to keep rates current, whereas only 20%, like 19.5, are expecting a 25 basis point rate cut. And then by June of 2025, during the summer, 56.8% are expecting a 25 basis point rate cut to maybe 50 basis points. So by summertime, that's when we would expect the Fed to start lowering interest rates. And in my opinion, I think they'll start adding to their balance sheet as well too. And then I believe we're going to see global liquidity break out alongside Total 2, Total 3, Bitcoin, the entire altcoin market. And I even think gold's going to continue to do well too. But we will see, because we need to watch the global liquidity index. And if you guys didn't watch my video I made right here about 3 weeks ago, talking about my crypto exit plan for 2025, showing you the top 5 trading signals to sell the peak and walk away a millionaire. You definitely want to check that out. I'll leave a link in the description below. We talked about the Pi Cycle Top Indicator, monthly RSI, MVRVZ score, Puel multiple, and Bitcoin's dominance, and what all of these key indicators are showing right now in the market. That's very important to pay close attention to, because they're all saying the same things. That's extreme confluence for what's about to happen next. Also, Donald Trump will speak at the Digital Asset Summit tomorrow. So the summit will be held a day after the SEC dropped its appeal. So I would be surprised if he doesn't talk about XRP. And there's been rumors about him announcing a 0% capital gains tax on all crypto trading investing in the United States for made in America crypto companies. Guess what? Ripple's made in America. So finally, for once, a major positive day in crypto and a positive Fed balance sheet update from the FOMC. Beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities, like I just mentioned, from 25 billion to 5 billion. So this is the final stretch before the Fed ends quantitative tightening. The cap to the sales of the Fed balance sheet was 60 billion last May, then down to 25 billion, and soon will be only 5 billion per month. Signs are looking good for quantitative tightening to end mid-year and for quantitative easing to start. Then, in my opinion, which I could be completely wrong about, but the markets are going to explode to new all-time highs. And then we'll see the bear market happen going into 2026 that you need to be ready for. So click the link in the description below, guys. Get started with Altcoin Pro University right now, because we're going to keep you up to date on our live weekly calls every single Monday, Tuesday, and Thursday. The next one is coming up tomorrow at 12 p.m. It's called the Crypto Catch-Up Call. We have our research team covering the markets each and every single day for you guys. And even though in the short term, we're going to see massive volatility, potentially sell-offs further to the downside, in the next few months, I think we're going to see a pivotal change in the market that you have to be ready for. So if you don't have money on the sidelines right now, then focus on making more money so you can capitalize on the right opportunities. Because if you have money on the sidelines, then you don't get wrecked if we see a further sell off to the downside. And also you can capitalize on opportunities as they arise when the markets start breaking out again. So if you guys want access to our research team's top DeFi picks, airdrop picks, altcoin picks, get your questions answered, along with 100+ expert curated classes, then you can take action right now. Click the link in the description below. It's only $97. No contracts, no commitments, pay as you go. We have a 14-day money back guarantee. So if you're unhappy for whatever reason, or you just don't get any results, then ask for a refund. We'll give you your money back. And worst case scenario is you test it out for a couple weeks, it's not the right thing for you, and you get your money back and you learn something new. Best case scenario is what you get access to from our research team after you get started completely transforms your life and your understanding of crypto to be an altcoin pro, the name of the company. So with that being said, I will see you on the next video. As always, you know what to do. Stay bullish.